What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy.
Yo.
How was your week in the market?
This week was better. This week was definitely better. I finished the week currently up 6.3% in my growth portfolio. I also I moved a lot of money around in the background, and it should clear by Monday. And I'm gonna crypto stake a lot of money at not a lot in perspective to me, at 19.5% APY. So I'm pretty excited for that. I'm going to be basically.
And what is it denominated in?
Terra is the currency. So it's a stable coin pegged to the US dollar. So I won't be buying. It's a crypto that doesn't move in itself. So there's no real underlying risk on the asset. So I'm just going to be making 19.5% on that, which is super nice. That'll be a nice little bump every week. My goal is to get to be making $100 a week off of that. Just have that as kind of side income. And yeah, I mean, spaces were awesome. This is our 20th space of the week. So, leaned into that. I did 9 hours plus yesterday. Crazy day, broke through 50K. And yeah, just excited to keep it rolling.
Ooh, I see we got Brad requesting to come in as well. Awesome, dude. Very excited to hear that. Yeah, my week in the market was solid. Okay, we had a couple decent numbers in there, but I am a Facebook holder, or should I say Meta, and that could have gone better. But I see we also have Brad up here as well. How we doing, man? I know we've heard from you a bunch, but as I've said this a couple times, more Brad is better. So, how has your week been in the market? Or how was your week in the market? Now that we're close.
Yeah, well, very kind of you to say. I think more Evan is definitely better too, but pretty as volatile as prices were. I didn't really do a whole lot. Like you, I added to PayPal just a little bit after the earnings shellacking, and other than that, no transactions for me. Just a lot of writing and yeah. Interestingly, I guess just a piece of news that came across this week that I was focused on that we didn't cover or in the noon spaces was the House of Representatives again for the sixth time passed safe banking, which is a cannabis reform bill that would pave the way for things like access to lower cost of capital with being able to access more legitimate institutions for capital market resources, and then other things like uplisting onto major exchanges, which would be not a margin tailwind like a lower cost of capital, but definitely a multiple tailwind or multiple expansion tailwind. Just because most institutions can't invest into companies right now because they're listed on junior Canadian exchanges, which are not liquid at all, and the furthest thing from efficient market hypothesis that you could possibly think of. But safe banking really paves the way for those two things. So just a summary: uplisting from junior Canadian exchanges to the New York Stock Exchange or something like that. And then also lower cost of capital. A lot of these companies are paying 13-14% cost of capital, just because, again, they're listed on junior Canadian exchanges and selling a federally illegal plant. Or what's considered to be federally illegal at this point in time. So a little bit of movement there. The big hurdle is getting it through the Senate. It's been passed again by the House 6 times. So not a huge development, but just another small piece of encouraging evidence that we're moving in the right direction, and it's a when, not an if, but timeline remains super unclear at this point.
We can go around a little bit more, but we have a couple more people planned to come an exclusive stock talker. I messaged a couple other people. We'll see what happens there. Brad, I would love to pick your brain a little bit more on the safe banking thing because I didn't really even see much about this. Is there anything? Is there any hope that this time is different? That so it passed through one of the houses, doesn't have to go through the Senate now or whatever. And yeah, is that still feeling unlikely or yeah? How are we feeling about this one in general?
Yeah, definitely still unlikely. It's Senate leadership right now that's kind of holding it up. wanting more social equity provisions added in to make it less of a bill that caters to what they think is deeper corporate pockets rather than fixing a lot of the inequities. But I think at some point we will find middle ground where we can let the tens of thousands of people that are in jail for selling a gram of weed, we can let all of them out, and we can also pave the way for a much friendlier business environment for these MSOs and multi-state operators. So no, I don't think it's going to pass this time, but yes, I think it will pass in the future. And then also another benefit I didn't mention is that they're not even insured. Like they can't buy legitimate business insurance at this point in time. So they really are recognized by federally regulated capital markets as drug kingpins because of how the laws are set up federally. So yeah, it would be a big piece of legislation. It will be a big piece of legislation. It probably won't be a big piece of legislation this time. And while that's frustrating because of all the benefits I mentioned, what it also does is it gives these companies that are already deeply profitable from a GAAP net income perspective, that are growing, pun intended, like weeds, and that have immense optionality in terms of more and more states coming online and being able to build really greenfield, another unintentional pun, but greenfield infrastructure in states where there's no legal competition with limited licenses. So all of this does, it's a delay. It's not expulsion. It's just a delay of this bill. And what that does is it really allows these companies that don't need to raise a ton of capital right now to continue funding their businesses. The strongest balance sheet companies with the largest scale and the deepest pockets, it allows them to grow their leads over not only the competition but over industries like consumer packaged goods, which these are CPG companies at heart, but pharma and tobacco and alcohol that all want a piece of this $20 billion industry growing at a 20% CAGR for the next 10 years. So what this is doing, these handcuffs suck for the short-term results, but they're great in that they're allowing these companies to scale their brands nationwide and to become truly massive businesses. I mean, some of these are going to be pushing $2 billion in revenue run rates in the very near future. So yeah, it gives them a lot of time to build bigger and build stronger and build more reputable, so that when these federal handcuffs do finally come off, and again, I do think it's a when and not an if, these CPG companies and these the Unilevers of the world, that's the bucket that I see most likely to want a piece, or maybe you saw Constellation and Canopy, but they'd probably want some, or other companies in that industry in alcohol. I think it's a very safe assumption to think they'd want a piece of cannabis when they can, but they're going to have to pay a hefty price if they want these assets, and if they want a piece of the limited licenses that exist across states, because these companies are going to be massive, because they're deeply profitable, and because they're not. Yeah, they're not. I want to split this up from that initial wave of hype from Canadian growers, and not to pick on them, but these are fantastic businesses right now, and all that's happening within this regulatory delay is allowing them to get bigger and stronger. So sounding a little redundant there, but yeah, I think this just makes it likely that they get a fat check at the end of all of this from a Unilever or from a Kraft Heinz or from someone like that, when federal laws make this a little less taboo and a little more doable for established industries to take a piece. So very long answer, but I think that the main takeaway, the main message from that is regulatory delays are definitely a short-term headwind to results, especially net income and free cash flow margins and top-line revenue. But once this delay is just allowing these companies to become bigger and stronger and more durable and more sustainable, so that they can't just be replaced with building a few $100 million worth of infrastructure in a few states. These companies are either going to have to spend billions of dollars in capex to catch up with all the warehousing and all the space that is in place. Even though there will probably be a large state footprint shift when interstate commerce borders come down, but that's a discussion for another time. But yeah, the message is they'll have to buy their way in, or they'll have to spend a lot more to enter the space than they'd have to spend if these federal laws changed right now. So I should probably stop talking because that was really long, and I'll give somebody else a chance to talk.
No, Brett, that was perfect. And honestly, it was something that wasn't at the top of my mind and top of everything I saw this week. So I am definitely down to explore that a little bit more. We'll see if more of our speakers come in and actually show up. But I appreciate that, Brad, 100%. Wolf, I want to bring you into this and throw it over to you. I know you're very active in the market, becoming more and more of a trader and doing stuff like that. So I would love to hear maybe any of the plays that you had this week. And also, dude, I know I'm going to self-proclaim you the king of spaces because no one else is doing this. You're about to be having a world record in there, maybe, but I'm thinking it's going to happen. About 20 spaces hosted each week. I would love to maybe know of any insights or anything that stood out from the week of spaces as well. So plays from the week and then any highlights from the spaces as well.
Sure. I wasn't incredibly active in the market this week. I'm still waiting for some of these names to find direction before I come in. On Monday, I did grab Neo puts. Unfortunately, they kind of took a dump because the stock already was up like 14% when I got them, and then still went up that day and the next day. But I held them because I did think it was going to come down, and I actually got out. I bought them for an average of 94 cents, and I sold them at an average of 75, even though at one point they were worth less than half of that. So not unhappy, but I did make back that money on QQQ calls. So I did have a space yesterday morning with exclusive. We went live at 9 a.m. and we did 2 hours. And at one point we grabbed QQQ calls. It was actually like perfect timing. QQQ basically dropped immediately after that. I don't think that these calls are worth, well, I guess now that the week's over, they're probably not worth anything, but these were 362 calls, and it was kind of near the bottom yesterday, and it popped for a second. So it worked out pretty well. So kind of made like a quick 15-20% right there, and was able to kind of come out of the week for option trading flat, but obviously the rest of my portfolio, which is heavily growth and crypto weighted in this specific portfolio, did pretty good. Finished the week up about 6% for the week. So that was pretty nice. And then on the spaces side, pretty crazy week of spaces. I don't know if I have too many analytics and insights. I was supposed to have a meeting with the Twitter Spaces team yesterday, but I was on a space during it. So I was trying to listen to the Twitter Spaces team with one ear and listen to the space with the other ear, but I was also moderating the space. So there's a little bit much to be going on at one time. But I would say I think there's just clear interest in so many different areas on spaces on Twitter, which has stood out to me, and that people are just trying to learn. And I think the best part and the biggest thing that I've seen is the connections between speakers on spaces that have happened in the spaces this week, whether that was in a real estate space or a opportunities in crypto or a Bitcoin space. We did a Bitcoin space. I'm pretty sure. Yeah, back on Wednesday we did a Bitcoin space and some others. I really did enjoy seeing the speakers connect with each other and then the audience wanting to participate. We opened up during multiple of the spaces. We had tweets that we put out asking for tickers, asking for ideas. People flooded to those. We were getting 70 plus tickers dropped on tweets asking for what do you want us to analyze, which I thought was great. I also liked our power hours a lot. Every power hour we did this week, the stock market went up during, which was great. Monday, Thursday, and today, all three, the stock market had a great rush upwards, which is really nice. So overall, a bit of a crazy week doing these 20-hour weeks, but clearly the response was great. The Wolf account blew through 50K. So that was awesome to see, almost, getting closer to 51 to finish out the week. A lot of people, hundreds of people joined onto our spaces calendar, so that they can see when all of our spaces are. And I just loved it all around. And even now, there's people in the space that are exciting to see in here, people that I've been following for a long time that are coming and connecting with us. So that's what I got, and happy to answer any questions that you have.
Yeah, I see Spencer below. Shout out to him. I saw that spaces you did with your dad a couple weeks ago on Bitcoin. That was pretty great. Love to see more people coming into the spaces community. Wolf, tell me a little bit more about that Brian Feroldi space. I feel like not as many people came in for it as should have, and maybe they got a lot of views after. But that was a lot of knowledge there, a lot of cool stuff in there. Was there any one of those stories that really stood out? Maybe even that kind of had real world impact in this week. I know it's a difficult question. It was from a couple of days ago, but yeah, was there anything there? And then also, let me throw you out a second question there. Bitcoin, what we got in the crowd, rallied over 40K today, back over 40K. Do we have any thoughts there and on crypto in general? But
Yeah,
two and one questions as always.
I do own a decent amount of Bitcoin. I actually was pretty hesitant going into this week. I'm glad it was able to reclaim that 40%, but it's kind of one of those things where I was like looking at it on a short-term bearish note, and then it did go up. So, overall, I'm happy because I do own it that it did go up. I'd love to see it maintain this and continue to go up. I am going to be doing another Bitcoin space on Monday with TBS, so Spot, or the Bitcoin space, basically. Actually, that show that Spencer was on with Peter. So I will be doing a show with them. We're going to have on a couple of people, and we're going to talk some Bitcoin on that. That's Log Scale. That's who it is. And then when it came to that Brian Feroldi space that we had, I thought it was pretty great. I actually did think we had a sizable crowd. We had about 400 or 500 people in there the whole time when we did that space. So if anybody's unfamiliar, Brian Feroldi is one of the, I think, just the premium accounts on FinTwit that you can find for mindset investing. He's a very successful investor. He got into things like Tesla, Amazon, other areas, a decade and a half ago, and now they've grown to be parts of his portfolio. I see we got Spencer. Maybe I'll take a pause there if you want to say something stock market news.
Yeah, no, super happy we can get you up here, Spencer, and join in. Like I said, the spaces you did a couple weeks ago on Bitcoin was really fantastic. Love to hear that. Maybe that second part, the Bitcoin question, could come over to you. What are we thinking of Bitcoin rallying over 40K today?
Oh, I really don't. I really don't pay much attention to the price. So no thoughts.
I have a question for you, Spencer, since we were able to get you up here, and this is kind of in relation to the space that I'll be doing with LogScale next week. Our topic for it is basically why Bitcoin is almost a separate asset class from the rest of cryptocurrency. Do you have any takes on that?
Yeah, I mean, I think that even like most of the crypto, not Bitcoin people that I know, even they sort of admit that Bitcoin is like in its own category. I mean, there are a few people who think that Bitcoin is going to be obsoleted by some new protocols, but I see it's becoming more of like the consensus that like regardless of what your thoughts are on other cryptocurrency projects, like most people admit that Bitcoin is here to stay no matter what.
Most people, not some specific ones. Yeah. Sorry, running with the joke. Okay. So I think, yeah, in that space, we're going to dig into that. One of the topics which I think we're going to mainly hit on in that space is utility and usage, right? And that's what we have to dive into because right now, we see more now than ever when you look at something like Ethereum, perhaps Solana, Poly, people are using those as everyday currencies to purchase, specifically with the development of the NFT market and other areas along that. Not a lot of people buying NFTs or other items with Bitcoin. So you kind of have to break down into people, why is this different and what is the purpose and the use case? And I would love to hear from yourself, as these other ones are gaining popularity as currencies, where do you see Bitcoin fitting into that spectrum?
Well, look, I mean, when you talk about utility and when you talk about use cases, I don't see any use case that is more important than putting the world on a hard monetary standard. So it's like when people say things like Bitcoin has no utility, that just makes no sense to me, because being on a hard monetary standard is quite useful, to say the least.
Can you elaborate a little bit for those who may be unfamiliar? I guess, the last time we had this was maybe the gold standard. So it's tying back to something that has essentially a limited amount that can be created. Is that the ultimate concept?
More or less, yeah.
And then as we move past that point where no more can be created, and obviously, in 2140, we're all gone. But from a theological perspective, what happens?
Well, first of all, the amount of Bitcoin supply expansion now is pretty negligible. The rate of inflation is already much lower than the rate of inflation of the dollar. So it's not like we have to wait 100 years to get to the point where Bitcoin is really a hard asset. We're already there. Sorry, what was your question? I lost track.
Yeah, it was kind of from just a economic and I guess ideological perspective. What happens with Bitcoin as we move past the point? I think that I agree with you. A lot of it has been mined by 2040. The last 100 years are definitely negligible.
I mean, I'm pretty sure it's already like 90% has been mined. I forget the exact number, but it's, I mean, the vast majority have already been created.
Yeah. So I'm kind of thinking, okay, so we're getting to this point where most have been created. Now, I guess it just comes down to mass adoption is kind of what I'm getting at. At what point, how does this become and achieve, mass adoption? And some would say it kind of has, right? A lot of people are using it and using it as that store of value, having a hard monetary system. But are there certain obstacles that you think need to be overcome?
I mean, yeah, there's a lot of naysayers out there, and they need to be convinced. But I think a lot of the growth will just happen organically.
Yeah.
So you already see that happening. So I just think the more the price increases, the more that will draw people in, and people discover that it's just a superior monetary system.
By the way, I did a quick look into it. So who knows how accurate these numbers are, but it says about 18.9 million Bitcoin have already been mined and are currently in existence. Divided by the 21 million, we are right around that 90% number that you said.
Yeah.
Yeah.
And a decent amount have already been burned. So Spencer, I actually want to tie this back in with the stock market. I know you're also a finance guy. There's a lot of other assets that revolve around Bitcoin that people can invest in. Specifically, Bitcoin miners have become a popular play. We actually had the chief commercial officer of a publicly traded Bitcoin company come on a space a couple weeks ago. We had the managing director of the Bitcoin magazine come on a space this week, and we were able to chat with them to dig a little bit further into that. Are you personally, have you researched investing into these associated assets that are not Bitcoin itself but revolve around it?
So I sorry, I've been a finance person. I've been interested in the stock market since I was 12 years old. But so that was several years of my life I was very devoted to that. But at this point, the only asset that I own is Bitcoin. So I'm not really interested in looking into associated investment opportunities, because I think that the Bitcoin, the potential upside of Bitcoin itself is so high that it doesn't really make much sense to buy anything else. Like why should I bother doing a bunch of research into one mining company, one management team, and betting on them as opposed to just holding the asset? I mean, if the token has 300x upside, I mean it just seems pretty pointless to focus on anything else.
Stock Talk, do you want to weigh in on that?
Sorry, I was bringing my dog in from a walk literally just now. I didn't hear the tail end of that. What was it?
Yeah, just to recap there. So I asked Spencer, with Bitcoin, there are associated assets, and I know that you trade Bitcoin miners all the time. There's more than Bitcoin miners out there. There's a lot of things that revolve around Bitcoin and certainly have a correlation or a beta to the asset. Asked Spencer if he invests in any of them. He said, not at this point. Sees the highest upside being within Bitcoin itself, potential 300. Was that what you said, Spencer? Was it 300?
Yeah. So the number I throw, and there's not much. There's not much. I mean, I could say 300x. I can say 400, 200. Don't put too much weight on the exact number, but the potential gain is orders of magnitude. And I don't just mean like in nominal terms. I mean in real terms. So I think that like the when I say 300x upside, I say 300x upside in current dollars, so adjusted for inflation. And I think that another way to measure it, I guess, would be the Bitcoin to gold ratio. Right now that ratio. So what's the gold price right now? Right now?
Let me take a look. This is just like GLD or
actually 1800. So 40,000 divided by 1800 is 22. So right now the ratio of 1 Bitcoin to an ounce of gold is 22. I think that ratio is going to end up being somewhere between 10,000 and 100,000. So if you say 30,000 divided by 22, I mean that's 1,300x upside there. For the price of 1 Bitcoin, for 1 Bitcoin priced in gold. So yeah, just to reiterate what I said, when those are the kinds of returns that you're looking at, I just don't. I'm not motivated to look into other investments.
Stock Talk, thoughts on that?
Yeah, I mean, everybody's entitled to their own opinion. I just view for people who are bullish on the near term price of Bitcoin or even the midterm price of Bitcoin, the Bitcoin miners have massively outperformed on a percentage basis.
Well, first of all, my timeline is not short term or medium term. Medium term. My timeline is decade. I'm basically when I'm deciding which assets to allocate to, I'm basically asking myself what do I think the world will look like in the year 2050, and I allocate accordingly. I don't care at all what happens to the price of Bitcoin in the next week or month. I couldn't care less. The only reason I even know what the price of Bitcoin is because I'm addicted to Twitter, and so much of my feed is like people commenting on the Bitcoin price. I really never check the Bitcoin price. I just I only know what it is because I'm on Twitter so much.
Yeah, I mean, yeah, if you're investing in it for the long term, more power to you. I think Wolf was just asking me from a return basis. Yeah, I mean, if you're looking to trade Bitcoin, I mean, even if you thought it was going to go to 100K tomorrow, which I'm not saying anybody does think that, but even if you thought that, it would be a 3x in price. These miners, over the same period have outperformed Bitcoin by 10x. Granted, they're leverage exposures, so when Bitcoin goes down, they tank as well. But from a trading perspective, purely from a trading perspective, they have outperformed. I mean, I own some Bitcoin as well, but for me, I find a lot more profitability in trading the miners because they perform as these leveraged exposures to Bitcoin, and there aren't really any good leveraged exposures to Bitcoin on the market. And so I view them as a way to trade the volatility in Bitcoin if you are trying to do that, and to be able to make money off of that. So yeah, that's just really my opinion on the miners specifically.
I'm not a trader at all. I don't.
Right, I'm not speaking directly to you. I'm just speaking in general for people who are looking to trade it.
And I don't even think of Bitcoin really as an investment. I think of Bitcoin as savings. I don't view it as something that you buy, hold for a few decades, and then cash out. I don't think there is such a thing as cashing out. Like, I think buying Bitcoin is a one-way street out, away from the fiat system. So ultimately, once the purchasing power of Bitcoin has stabilized to somewhere like it would be over 10 million in today's dollars, then it would just be like, I suppose I would be exchanging some sats for like consumer goods, but then I would simultaneously be receiving sats. So it would be like some people. It wouldn't be like a dumping my bags kind of thing. Like I'm always going to have a Bitcoin allocation, always.
All right, I think we can dig either a little bit more to that topic, or we can move around. I do have some Bitcoin questions, but also I know we want to do some stock market stuff. Stock market news. Where do you want to go with it?
I'm down to throw one more Bitcoin question out there and then get around one more time. Spencer, if you want to talk anything else up here, definitely would love to have you. Would love to keep this question. It was a pleasure being able to have you come up here and let us hear your thoughts. So definitely our pleasure on that. Wolf, yeah, if you want to throw him one more question, if you got any good ones, and then yeah, actually, wait, sorry, Wolf, Brad, I want to bring you in this, give you the chance. Did you have any questions or any thoughts or whatever on the Bitcoin topic while we're here? And then Wolf, you could take it back and ask a question.
Yeah, I own a little bit, and I do deeply identify with owning an asset that is divorced from federal government and Federal Reserve printing practices. I definitely I allocated a few percent of my portfolio to it a few years ago. Haven't touched it since, and don't really plan to touch it for a long time. But in terms of arguing the overall fundamental case, I'd rather listen to our other speakers than listen to myself here, because I'm definitely not a crypto expert or not a Bitcoin expert, but I do own a little bit, and that's the only crypto exposure I have.
Nice, Brad. Spencer, I'm curious. Are you attending any of the Bitcoin conferences this year?
I do plan. I will probably be in at the Miami conference in April or whenever it is. But I mean, I haven't made any concrete plans yet.
Nice. I just got my ticket to that one. So,
I did go to the Bitcoin conference last year as well. I was there.
Very cool. How's that?
Overall, a good experience. It was very, very crowded, much more crowded than I thought it would be, but still overall a good experience.
Nice. Yeah, I'm excited for Miami. There's going to be two Bitcoin conferences in Miami. The one that's being run by the Bitcoin Magazine, and there's going to be one actually the few days before that. So kind of excited to see both of those in
Wait,
action.
what do you mean at a conference a few days before that? Who hosted by who?
Yes, I can actually pull that up for you right here. So I know that the second one is from the official Bitcoin Magazine, and then the one before that is going to be. All right, I have the website. It's going to be it's
Oh,
MiamiNFTweek.com. Yeah.
yeah, not really my thing.
Yeah, so I know that they're definitely like focused on Bitcoin, but it's I guess they're more leaning towards NFTs. So you're not leaning into NFTs at all?
No, I just like it's my portfolio allocation is probably as simple as possible. It's just Bitcoin and nothing else. I don't own any other asset.
Yeah, they got Mayor Suarez coming in for that one. So should be an interesting one. I'm excited to hear him speak. But yeah, no, definitely that big Bitcoin one they got. Have you ever interacted with Nayib Bukele uh, from
Uh,
El Salvador?
no.
Okay, yeah, I think he's going to be at the Bitcoin conference, so maybe there'll be some opportunities there. It's quite a presence here on Twitter, so I'm interested in it. Okay, I'll throw just one more question out there, and then we can kind of roll into the rest of this. We're going to be talking for anyone in the crowd. We are going to be going into some earnings. We also have exclusive and others on that we'll be getting analysis and content from, but we were lucky enough to have Spencer Schiff hop up here with us, so we are chatting a little bit of some Bitcoin topics. We talked Bitcoin adoption and mining and portfolio, things along those lines. So the last thing that I have here just to put into it is what is going to be, is there anything that in applications that you see being built on top of or off of Bitcoin that are going to be a major attraction to it? For example, with ETH, right, with the smart contracts, this opportunity here with NFTs has certainly increased the amount of ETH that is being held by retail. Do you see any opportunities or applications that are going to push people to want to have Bitcoin, whether that is as a currency or even to just hold it? Are there going to be other rewards or anything beyond simple price appreciation?
Of course. I mean, you see what's happening with the Lightning Network, and then people like Jack Dorsey are working on a bunch of different projects. I mean, I know there's a lot of exciting development going on like second layer, third layer applications. So I think this industry is really going to be built out a lot over the next few years. So I'm really excited to see, like 5 years from now, what the landscape looks like.
Perfect. Stock market news. Anything else you want to throw in there, or we can keep it rolling? And again, Spencer, we will be chatting some earnings and other stuff from this week, but always welcome and would love to get you on some more Bitcoin spaces in the weeks moving forward if you're open to it.
Okay. See ya.
Yeah,
All right.
appreciate you coming up. Make sure everyone to check out Spencer, give him a follow. Make sure you're checking out all the other speakers we have up here. This space only get the top quality of people up here. Stock Talk, Wolf Financial, Exclusive Trading, Brad, Stock Market Nerd, Spencer, Bullish Rippers. This is an awesome panel we have up here. Make sure you're clicking into all their profiles, checking them out, checking out what they are doing. But with that, I want to keep us moving back into some of the stock talk. I know we had a crazy week in the market filled with volatility. We have trillion-dollar companies or almost trillion-dollar companies trading like penny stocks. We had Snapchat up 60% today, so there's a lot to talk about. I'm going to throw it over to Exclusive first, hear how your week was in the market. Any big trades, anything like that going on?
Hey, what's going on, man? Hope everyone had a great week. Yeah, and I agree. There's definitely a lot of great talent, great speakers up here, so definitely check them out, give them a follow. Um, you know, it was an interesting week. It was I played, like I said last week on the same call on Friday. I kind of gave my thesis going into this week, and my whole thing was SMH. Playing a lot of these semiconductor names, and it worked well. It played my favor, played in our members' favor, and people on Twitter, everybody made some money. Some interesting things happened. Of course, obviously, with all the earnings, there was some crazy stuff going on with Amazon and Snapchat, and everyone has been part of it. I don't need to reiterate, but we're trading in such an unprecedented market. Like, I haven't been trading for 15, 20 years or anything like that, just shy of 10 years, and or just over 10 years. And I can honestly say that I've never seen anything like this, and this is a very difficult environment. So, normally what I like to do is get into trades, and have, by the end of the week, I'm in, 30 to 60 different trades that are just risk free that I've, gotten into, scaled out for profit, and just let them ride. Now I've had to adapt my trading style personally, and I'm sure everyone else has, into more of a scalper's delight market, if you will. And these moves are, you're in the situation where, especially this week, where whether the volatility is high or low, you're in a situation where you have to be in and out of positions. Whether that means you made 5, 10, 50, 100,000%, whatever the case may be, you have to be okay with the smaller wins and just rinse and repeat. Because these 1,000, 2,000% runners on options, or these 5, 10, 15% on equities, or these 100+% on OTCs, they're just not predictable like they used to be. And when you do catch these volatile moves, they can really pay you handsomely. So, this week was really about carrying over a couple positions from last week and using those profits for the entire week. So, NVIDIA, AMD, Microsoft, Google, Bill.com Holdings, a lot of those names that had carried over from last week in the Qs, and in the semiconductor ETF paid really well. But there was some obviously highlights, like some of the earning plays that stood out that paid astronomical returns. Google, Amazon, and again, Bill.com is actually kind of the same list too, which is ironic. But then you had some of these less paid attention to names in different sectors that weren't necessarily getting a lot of attention. There wasn't quote unquote a trend or momentum in the sectors. So when energy was kind of lagging a little bit behind, and people started rotating money from these semi names into financials and into consumer durables, and you know what I mean. As money rotates, you have to kind of be on the defensive mode. If you're into a predominantly or non-diverse portfolio on options, particularly, you have to rotate that money out into other sectors, and you can't just have all your eggs in one basket. So, that was another story of this week, and how it played out was, if you're overloaded in semis, kind of shift into a different sector, and go to financials, or find something that there's always something outperforming in every sector, right? So, that was the thesis going into this week. Playing the earnings that we could play with profits, because they can go either way. No one can really truly predict unless you have inside information, and just being defensive. So I think the trade of the week, I want to say Amazon, but I feel like that's unfair to say Amazon, because that was just no one can expect that kind of a move without, let alone without a stock split. So that I don't even want to count that move, but obviously Google to the upside, then Google to the downside. Both of those on the option side for Google, they were expensive contracts to begin with, but making 300 to 600% on those names is a big deal, especially for me personally. So I'm really proud of those trades. And then Nvidia, AMD, those were all over 500%. UPS, and of course, my love-hate relationship with Tesla continues, and Shopify. So some of them were sympathy plays, but overall, it was. I think my list was only between 10 to 30 names as a whole for the entire week. So just following the trend and not counter trading the trend, so to speak. So yeah, that's pretty much how the week went. I did have a failing trade this week. I know everyone likes to hear when I lose on something. I got into Facebook puts too early. I got caught right before the reversal. I did get into a second entry on the puts that did pay and covered some of that loss, but ultimately that was when I posted on Twitter. But the first entry I bought those same puts at $1.30, $1.40 average, and that specific trade, that one failed. So that was my losing trade of the week.
Awesome. Love to hear that. Everyone does have those losing trades, so it's really relatable to hear when other people have them. And I think the biggest thing Exclusive and everyone else will preach is obviously you cut your losses quick and you let your runners win, and everything tends to work itself out. Exclusive will definitely come back to you. I want to make sure we intro in everybody and give everyone this good place to speak at the start. I know Stock Talk, we let you ask a question, but I would love to hear really how your week was in the market, anything that stood out, any plans, any big trades, any big Discord calls, anything like that. Yeah.
Oh yeah, no, this week was fantastic. I mean, it felt like, a lot of people were focused on playing the indexes, and I think I talk about this all the time. I don't really trade SPY and the Qs that much, and I know that's a super unpopular opinion. I know a lot of great traders that do trade them. I just don't trade them because I really feel like the indexes move at least a little bit before everything else. So there's always a little bit of a lag on the individual stocks. So, I prefer trading individual stocks and then watching the move in the indexes. Like whenever I'm day trading, I have my chart for my individual stock pulled up, and then right beside it, I have my SPY and QQQ pulled up. And a lot of times you can fade a move or get out of a leading position when you see the index is turning around on you and you have a lag, because even the algos are fast, but they're not instant. And so, if you can get good at it and trading while watching the indexes. I know a lot of people that day trade and they just watch the chart that they're trading. That's it. I think that's a mistake. And again, I'm just talking about what I do. I know that different strategies work for everybody, but this week we hit a lot. I mean, we came into the week swinging Netflix and beyond into Monday, which ripped, and they ripped into Tuesday as well. I was in equity and calls for both. They printed. I think that one of the Netflix calls was up like 700%. And I based that trade entirely on sentiment too on Netflix. For me, it wasn't about the Netflix chart. It was two things: A, that I felt like the earnings reaction was overdone, and then B, I saw Ackman buy, and that was it. And I was like, all right, I'm getting calls on this because I think other institutions will draw interest purely out of that catalyst alone. Obviously, they did. We saw two, the three actually monster sessions for Netflix. So that was a great trade. Beyond also, Beyond is one I've traded. I've never traded it before this month. And then January 5th of this month, I can't remember what the catalyst was. Oh, they signed the KFC deal. That's what it was. And I remember I read that and I was like, oh, is it just like a test? And then I saw that it was being sent to all 4,000 KFC locations instantly. And I was like, what? For a company this size, that's a pretty significant deal. So got calls on that. It ran from 59 to 73. Got out, not right at 73. I got it at 70. So I was a couple dollars away from the top, but I don't try to guess tops anyways. And then bought back in on the $80 upgrade from Barclays, and the stock ripped again. So it's great when you find a stock back at the same levels that you bought it again for a catalyst and then get back into another one. So Beyond was, I think, my most profitable ticker of the month because I traded it twice on those big trades. Yeah, it was. Beyond was my most profitable ticker this month. And I've never traded it before. So I think that's always fun when you get like a new ticker that you've never traded and you nail two trades on it. But yeah, that was great. Traded Charge Point again too early in the week. That was another good move. Picked it up at 11.90. Sold like for, I don't know, pretty significant gain. I don't remember the trade. I don't want to go look for it right now. But PPSI, we day traded that one too. That was a banger. Today, Oxy calls I picked up yesterday. I didn't even pick up the same week expiries because I felt like oil maybe could keep running through next week. And so I picked up the 218s yesterday at 175. This morning they ran to like 330. So I sold half of them. I mean, they were up 87% overnight and they weren't even near-term expiry calls. So I was like, all right, I mean, that's great. Got rid of some of those, kept some, and I might be wrong. We might come into next week, oil's down, and I might lose on those, but I'm fine with that. They don't expire to the 18th. And then NVIDIA calls today. TSDR actually called those in my Discord. Those were fire. Those ripped. He called them right at the bottom, right before that rally in the Qs and SPYs, and they ripped. They went up like, I think, 400% at the peak. Tesla today was nice. Roblox puts yesterday were super nice. I learned in my Discord too. We just waited for the short report, and then as soon as it came out, just slap puts, and they skyrocketed. No matter which ones you bought too. That was an easy play. I like doing that when these short reports come out because the immediate reaction is always super drastic. And if you can get in early enough before the bids start going crazy, you can get it for a decent price. And it may feel like chasing, and to a degree it is, but if you time it well, and granted, you have to be an experienced trader to do this. I'm not recommending that new traders do this. If you can time those short report entries well on puts, those can print. Because sometimes people start piling in such high volume. It's similar to the effect you see in options pricing at open, when you get the influx of buyers that open, like in the first hour of the session, it's very similar to that. When these short reports come out, the premiums can get so inflated. If you get them before that happens, you can make a bigger gain sometimes selling them right there than you can even at the bottom of the tank. So yeah, Roblox short yesterday was nice. Today it obviously rebounded, but I expected that. Spotify was really nice. Mass called that one. Yeah, so a lot of good plays this week.
Love it. Very, very active week. I feel like we've kind of run into this theme recently of everyone saying I am trading less, I'm doing less, I am trading in smaller amounts. This isn't my market necessarily. I'm waiting for confirmation. I even remember seeing a tweet from you. It might have been this week or last week. It was like, this market, I like markets when we're going up. I like markets when we're going down. But in this period of chop, it's really difficult. It's harder to know where we're going to be. And that was paraphrasing a little bit. But I wanted to kind of get your thoughts on maybe the general market conditions, QQQ SPY, how you're dealing with that, position sizing and everything like that.
Yeah, I'm sizing positions generally smaller because, especially with day trading, your day trade can go against you. And I try to control my risk. So, that's going to be the case no matter what. But, the bigger size you're using, even if you're doing let's say on contracts, you're doing a 20% stop, that can be a huge amount of money if you're doing it with a very large position. So I try to size more conservatively in a market like this. I also try not to get greedy, although, I'm human. Sometimes I do get a little overzealous and I'm looking at a contract rocket and I think it can go a little bit more. But I try not to do those things in a market like this. And, I think the big thing is that, like you said earlier, for most of this chop, a lot of traders, sometimes some of them took a step back. I don't think it's necessarily that you need to take a step back. I'm not really an advocate for I think sitting on your hands sometimes is fine, but I think being completely passive to the action isn't. If you are a trader, and granted this isn't the case for investors, but if you're a trader who trades regularly, it's better, in my opinion, to learn how to adapt and trade different markets than it is to be like, hey, this market isn't for me. So even myself, I'm used to wanting to hold a little bit longer, even on my day trades. There have been in the past, I've liked to hold things maybe through a whole session or, half a session. And here it's come into okay, I got to hold it for 2-3 hours. So that's a little annoying. And I don't think it's more difficult. It's just more stressful. You have to be more attentive. You have to be more disciplined. But I prefer swing trading things. I do, because I think it's a little bit more gratifying when you're like, yeah, I'm going to swing this and the stock goes up for 5 days and your options are up 3,000%, your equity's up 200%. Those kind of plays are awesome. It's gratifying as a trader, but I can understand that every market's not going to give you those opportunities. A healthy bull market does have a lot of continuation. It does, but we're not in a healthy bull market. We're not in a bear market yet either, thankfully, but we're not in a bull market. But I would honestly, I shouldn't say thankfully, because I would rather us be in one of the two. I'd rather us be in a raging bear market or a raging bull market, because in a raging bear market, I can just put down shorts and ride them, right? And in a raging bull market, so it's just human nature to want it to be easier. But, I'm critical myself for even saying that, because I should just be like, you know what? No, I just got to place more trades, be more disciplined. And I've been trying to do that lately, and I've been doing really well in the last few weeks comparative to the few weeks before that, while I was adjusting from swing trading all of 2020 and 2021 to kind of on a dime going to day trading. It's an adjustment, I didn't trade nearly as many options in the last 2 years as I'm trading now. And so, it's kind of, I've had to dust off the skills there a little bit. I used to trade a lot of options when I first started trading, but, I didn't really in the last year. So for me, it's just, trying to be adaptive as possible and trying to learn. I learn shit every day still.
100%. Very important to learn something every single day. Yeah. The best people are constantly learning, and the best people are really good at knowing what they don't know, actively trying to fix that and get that knowledge, but really recognizing that. I think that's a really important concept. I see we had to have Brad jump off. I know he had to go around 5 o'clock. Hopefully he comes back up. We can give him the shout out. Ooh, perfect. I do see Brad coming back up. I'm going to throw it over to Brad in a minute or two. We're going to talk through one of the earnings from the week. that he follows, maybe any that he's done research in. But I definitely did want to bring exclusive back into this conversation with that question, kind of talking about really more macro SPY, QQQs, where we are in this market. I have a feeling it will be a similar thought to Stock Talk, but also kind of, what are some of the things that could maybe knock us out of this market? Is it really us just waiting forward for the Fed to make their decisions and really do stuff with the rate hikes, or is there anything else in the market, any more earnings or Fed meetings or whatever that you think could maybe push us in a direction, or maybe that you're even looking for that could signal that? But yeah, exclusive, you there?
Oh, I thought you. I was
My
listening to
bad.
you, but I thought Brad was talking. Um, yeah, no, I gotta do my homework this weekend for the earnings. I haven't really taken a huge dive into some of the fundamentals for most of those names coming into the week because I like to focus on week by week case. But there's some of those obvious moves that you can kind of see from a technical perspective also, mixing them with the fundamentals. Build.com Holdings was one of those, where you can kind of see, okay, it's at a good technical break, it's at a good support, it's got potential moves that you can make to the upside. Let's get a call that depends on good earnings, and even if we play the run up, we can make a couple, 20, 30, 50% scales before the main move. So, those contracts aren't really cheap on Bill, but they paid a couple 100%, even though the contracts were $900 a piece. So, playing the earnings, if anyone that's listening wants to play earnings, if you're not clear of a direction, then just use spreads. Use a straddle if you're not sure. If you're a little bit more sure than not, like I was a little bit tentative with Amazon. Last year when Bezos stepped down, I lost a lot of money. It was one of my biggest losses in my career. No big deal, moving on. So this year, going into an earnings at around the same time, I'm thinking, okay, well, I'm going to play more conservative. I'm only going to get, 15, 20 contracts of a strangle. And a strangle means that I'm leaning more direction to either direction. So I'm a little bit more bullish than I am bearish because there's a possibility that they could talk about stock splits, especially after Google just announced theirs. So I mean, I'm like, oh my God, this is going to go crazy. Just in case, I'm going to lean more to the bullish side than bearish. So in which case, if that's how you feel about a stock for earnings in particular, you can make those strangles. But if you're not clear which direction either or, and you want to have a position either way, then a straddle in either direction, buying calls and buying puts are a really good way to cover some of your losses. You mitigate your losses, but you also mitigate your profits. So there's always alternatives. And, I don't talk about spreads often, but the normal buying in calls and puts are the riskiest way to trade options. So if you're particularly playing earnings, in an undecided market, like Stock Talk was just saying, this is a very indecisive market. I would much rather have a clear direction in either way. Whether we're bullish or bearish, I'd rather know in particular versus it just chopping all day, staring at the wall, watching the paint dry, or whatever what you kind of wall you have, whether it's glass or whatever, who cares? So that's how you can play those earnings. And going into next week, I don't have any particular names to give right now, but I'll be posting stuff over the weekend. So be sure to be following so you can see those posts. Um, and as far as, where we are as a whole in the market, people were freaking out this week, and then let me pull up my chart here. People were freaking out because of the situation that we were in, particularly looking at the SPY or SPX, but we'll talk about SPY in particular. Everyone was concerned because of the levels we were at last week, and then going into this week, okay, Friday we had a really good close. Everyone was like, oh man, we reclaimed the uptrend, or we're still below, a weekly or monthly pivot. I'm still nervous. We're below the golden pocket. You name it, everyone was talking about it. Either direction, the sentiment was bearish, and that's when you have to be a little bit more prepared because if everyone's leaning one direction, it's most likely going to be the opposite. And more times than not, it's particularly when retail is talking about a specific direction, the market makers are going to find a way to screw them, right? That's the name of the game. Retail versus hedge funds and market makers, whatever. So from a technical perspective, we're still above that uptrend. From a technical perspective, we're still in range to where we can have a move into either direction. I'm particularly a bull, so I'm more bullish than I am bearish, and even to the point to where when I see a chart looking less bullish, I invert the chart and I still play a bullish trend. It's just inverted. So I think going into next week, the thesis is going to be what major earnings do we have um, that can kind of sway the opinions regarding sentiment, and look, considering the macroeconomics, what can happen next week by looking at the economic calendar, by seeing what type of events are coming up, and what kind of sympathy moves can come from that in which sector, because every sector performs differently. You can't just like Stock Talk was just saying, you can't just be watching, 2, 3 charts on specific tickers all day. You have to be looking at multiple things. I've always got 10 charts open at one time, period. Whether I've got multiple indexes, ETFs, individual stock names, or precious metals, or commodities. It depends on what your goal is for the day. Are you trying to follow the trend? Are you trying to make a play based on commodities and the reaction in oil, or whatever the case may be? You have to have a plan going into each day, and the plan going into next week should be prepare for either direction, because we're at that point to where, if I'm looking at it from a fundamental perspective, what I was just talking about, everything next week is it's up for consideration. If I'm looking at it from a technical perspective, I'm thinking, okay, we're below some major EMAs, we're above some major moving averages, both daily and weekly. We have some cooled off RSI, so we're not oversold, we're not overbought. We're just kind of in that it can go either way. And I hate that, because what that means is that if people are being indecisive, there's not a clear direction. And the volatility, I like volatility, but to the point where I like it at the very, very early in the day in the market, so I can catch those moves really quickly and then just kind of hang out for the rest of the day, make some trades here and there. But next week the story is really going to be: do we hold the uptrend in the SPY? Do we hold the technicals, and do the fundamentals in some of the earnings next week prevent an overreaction in the market? Because, like it or not, the influence of the option trading is making a difference. I've had to completely shift the way I trade because of retail. So it's going into next week, it's all about how you play both directions. Don't have a bias, because a lot of people that had bias this week got screwed. I saw it all over the place. So yeah, going into next week, we'll talk about some individual tickers later on after I look at some charts, but I'll pass it over to somebody else.
Yeah, exclusive. I got a couple more questions and everything coming at you, and Stock Talk as well, be able to answer them. But I do know Brad does have to go in another minute or two. I wish we would have been able to hear some of your thoughts on some of the earnings, Brad, maybe Facebook or whatever we got this week. If you have that extra minute in there, would love to hear it. But I do know you had a hard out at 5. So if not, just tell the people more about yourself, wrap it up, how you're feeling about the market in general, and then tell us anything else you got going on.
Yeah, I do have to hop off, but I'll give a 60-second thank you to everybody, and really enjoyed listening to everyone talk, as always. Not to sound like a broken record, but the speakers here are always interesting, and so I have to say it every time. Otherwise, I don't know, but otherwise, so thank you for having me. Everyone have a great weekend. I don't think I have any earnings reports next week, so it'll be kind of a gap in the earnings season, which will be a little boring, but oh well. In terms of markets, I don't really very, very long-term investor. So in the short term, these guys can comment better than I can on that. But in the long term, seeing a lot of really, really young, impressive companies trading at a lot more compelling multiples than they were a few months ago. So I've been slowly taking advantage of that. Emphasis on slowly, and will continue to slowly take advantage of that, knowing full well that macro is extremely uncertain right now, and that and anyone telling you that we found a bottom, or that a bottom is in, is probably talking out of something other than their mouth. Just respect the uncertainty, respect the unexpected, respect the fact that we're all wrong sometimes. I think I'll leave it there, because I do have to hop off. But have a great weekend, everybody. Thanks for having me, and look forward to doing a lot more of these in the future.
Really appreciate you joining in, Brad, as always. For anyone in here, make sure you're following him And he's a really, really smart guy. He does some deep dives into stocks. He loves doing this stuff, stock market nerd. Check out the link in his bio. It's his free Substack. I know he had to jump off now. We'll make sure we get to you. He's going to be on all these spaces going forward. So definitely a lot of really, really great research there. We won't be going for too much longer. I know it's 5 p.m. on a Friday. That's Eastern time. I know some of us are not Eastern, but simply the superior time zone. We'll keep it there. But Friday, 5 p.m. I know we want to all go and enjoy our weekend or do whatever we got to do there. So we'll keep it going for another 5-10 minutes. I want to talk a little bit about setting it up for next week. I know how both of you guys feel. We are in this indecisive period, waiting for more news and more information. I want to kind of know and dig into a little bit of some of the things that you guys are looking forward to next week. I'll throw it to you, Stock Talk, first. But yeah, what is there any macro event? Is it really kind of just waiting on the Fed and taking the market as it's here right now, or are there any other major data points or whatever you're looking forward to next week? Stock Talk, I would love to throw that to you if you're here.
Sorry, I'm here. Yeah. I didn't know you were addressing that to me. Yeah, for me, the only thing that matters right now for sentiment is the path and pace of monetary policy. It's a lot of noise on Twitter. People who are doing the most with technical analysis, trying to call bottoms on SPY and the Qs. If you find me one technical analyst that spelled out what was going to happen in the SPY and Qs every single day intraday this week, or for the week as a whole, I haven't seen one. And, I know traders that have traded for 40, 50 years. I know traders that, have outperformed the SPY for 20 years straight. But the reality is that you cannot know what's going to happen in this market from a technical or a fundamental perspective because it's a sentiment-driven market. And it's just that simple. This is a market that's driven purely around the narratives, right? It's driven around the narrative of what the Fed will do, because whether or not, some of these banks are projecting 5 or 7 hikes, or they're projecting a 50 basis point hike in March or a 25 basis point hike in March, regardless of what's being said, the reality is that no one knows what's going to happen because we haven't gotten to that point yet, and we haven't had the next 2 CPI prints yet. Let the inflation data come out over the next 2 months, okay? Let the CPI, the PPI data come out. Let the Fed respond to it. See what happens in March from an interest rate hike perspective. And if the market comes out of the March hikes with strings together 2 green weeks, let's say, I mean, that's not a metric or something. I'm just saying, the market strings together a number of positive sessions, then you can maybe potentially start to think that sentiment, at least buying sentiment, is returned. But until then, this market is driven entirely by the fears surrounding the uncertainty of the path and pace of monetary policy. And until we have a defined road, until the Fed comes out and says, look, we're going to raise points by raise rates by 25 basis points in March, and we're going to raise them by another 25 basis points at every meeting going forward. Would that be bearish? No, I don't think so. As a matter of fact, I think it would be bullish, because I think it would cause a relief rally where the market finally has certainty around the path and pace of policy, and then you can see bids step back in. But there's no bids in this market. Anyone that's been trading this market every day has been looking around. I mean, are there stocks that are going up? Yes. What I mean by there's no bids in this market, there's no insane buying pressure. Most of the insane moves we've seen is from short covering. The move you saw in Amazon was not entirely people going out and outright buying Amazon equity. There was a number of people that were bearish on Amazon earnings. Think about what the price action on Amazon going into earnings. It was down I don't even remember, 6, 7%, 8%, ahead of earnings. So there's clearly a ton of people piled into shorts, piled into puts. The stock skyrockets after earnings, on what I thought was really a misinterpreted EPS print, but that's another issue entirely. But anyways, the stock rockets on earnings, right? People are going to be short covering the next morning. And that helped, I think, keep that move alive today, or helped at least, keep it up. But you're going to continue to see that happen. You're going to see ER reactions where stock blows up on ER. You're going to see geopolitical tensions cause a dump in the SPY and Qs. But the primary narrative behind everything else, the COVID narrative, people that tell you that it's still about COVID versus reopening, no. The market has, I think, shown over the course of the last 4 months that the COVID narrative is not on the market's mind. And I'm not saying that It's not an issue, or I'm not being, anti-COVID concern. I'm just saying the market doesn't really care about it anymore. The market now cares about Federal Reserve pace of policy, and that's about it. And the more that people understand that, I think the less wild predictions you'll see on Twitter, because it's been frustrating to me to see people be like, we're at a bottom, and somebody asks them why, and they post a chart of SPY. Like, what if you wake up on Monday morning and there's chatter about inflationary pressures, or there's chatter about geopolitical tensions? That they're not going to respect that support. You're going to sell right through it. So this is like the best time for a trader who's not in tune with the news, who's not in tune with macroeconomics, who's not in tune with Federal Reserve monetary policy. This is the time for you to learn, because this market all year will be driven by that. Because as soon as the rate hike narrative is over, guess what's up next? Quantitative tightening. And the market's going to have its fair share of months to decide its reaction to that as well. So there's always another catalyst, especially in an environment like this, where the Fed had to put their hand in the pot last year, and now they have to take their hand out of the pot in a hurry because they spent all their ammo. And we're in a peculiar situation, because the only thing we have to depend on as traders, or anybody wants assets to perform well over the next year, the one thing you can hang your hat on, or can hope to hang your hat on, is that the economy grows. Because if the economy slows down in the face of rate hikes, in the face of quantitative tightening in December or January or February or March of next year, what happens then? That is the one thing that could crater the stock market and most of the asset related markets globally. Will that happen? I don't know, but hopefully the Fed is decisive now. Hopefully the next few inflation prints are cool. I think that's what bulls have to look forward to. You want the next two inflation prints to be cool. You want the Fed to start with 25 basis points in March, and you want the Fed to be raising every other meeting rather than every meeting. If those things happen for bulls, you can see a big, big rally in the indexes. You might even see the Qs rip past all-time highs. But that's a big if, right? We don't know. If the next two inflation prints come in hot, there's a very, very high chance, especially considering the labor numbers today, right? If we didn't have this blowout jobs report today, we did. Blowout jobs report today, if inflation's going up, the Fed has no reason to be hawkish at all. And so that's the concern going forward, and that's what people really need to weigh their decisions on. Do not weigh your decisions on technical analysis. Do not weigh your decisions on, oh, this company looks cheap, as in do not weigh them on fundamental analysis. Your decisions about the longer term thesis in the market, and I'm not speaking to day traders, because day traders play what's in front of them. But for people who are invested or are looking in the longer term perspective of the market, the only thing that matters is monetary policy. That is it. And anyone that tells you it's anything more than that is trying to overcomplicate the issue, or they're trying to prove to you they're right in some overly esoteric way. It's very, very simple. You want the Fed to raise rates at a slow and gradual pace, and you want inflation to taper down, and you want the economy to continue to grow. Those three things happen, it's bullish. Either one of them don't happen, it's bearish.
Definitely appreciate the long thoughts there. And it feels like love hearing the macro thoughts and everything like that. A lot of people like to get caught up in either one mode or one way to value things or whatever, and take that as gospel. But you got to really
We
be
live in
looking at
like
the
a
entire picture.
micro over macro climate, especially on
Yep.
Twitter. On social media, it's all micro over macro, because everybody's looking at a chart of a company thinking like, oh, this stock's undervalued. There's so many undervalued stocks in the market right now. The reality is, if there's not enough liquidity to fill the stocks.
So wait, I'm looking next week. We got a core CPI number coming out, which is the inflation number, on Thursday, February 10th. It's gonna be around 8:30. Would you say that's the probably the number one thing you're gonna be watching next week from a macro perspective? Or I could kind of look through a couple of the other ones. It does look like the biggest one though.
Yeah, CPI is very important. Very important.
Perfect. All right, exclusive. I want to loop you back into it, kind of asking you a similar question. What are we really looking for next week? Is it just solely the Fed and the CPI number? And obviously, as a trader, you're looking at a bunch of stuff, but from the macro perspective and how you're deciding to do this stuff, is it really the Fed for the next week, that Thursday meeting, or we got some other stuff in there? Quickly, we do have a couple earnings. I know it's definitely not as many as this week and the last couple, but we still have a couple names like Pfizer, Coca-Cola, Disney, Uber, which so definitely a much lighter week in earnings. I won't lie to you, but Pepsi's on there as well. Philip Morris. Are you looking for any of those as plays or whatever? Yeah. Well, what are we? I blabbered on a little too much for that question. Exclusive. I'm just gonna stop talking here and give it to you.
No, you're good. You're good, man. I'm just kind of hanging out. A little bit of spacing out. Just my brain hurts from the week. It's been a crazy week. Next week, there's things that obviously I don't want to just reiterate everything that Stock Talk was saying. But in addition to that, I would say that, obviously Monday you have consumer credit. So, pay attention to those bank names and those credit card companies and see, we already saw some moves in those names, Visa, MasterCard. We saw names in that sector that can possibly be affected. It's kind of the same, think of it kind of like a earnings report run up. People are preparing for, the whatever the forecast was from whatever source that they're paying attention to. And that's another thing too, I got to reiterate on this space, is that, a lot of people are just recycling information, and it's really important to find the information for yourself and not just rely on someone's account you follow. Like, if you're following me, don't just rely on what I'm saying. It should never be. That's the same as having a bias. If you're just following one or two accounts and going off of what they're saying as the gospel, you're doing yourself a disservice, and myself included. Back to the point, we have consumer credit. We've got what's on Tuesday? I probably should have looked up this before I started talking. I know international trade data. Um, is there is there real
Tuesday
is there
internet and
real
yeah, real household debt as well on
Okay,
Tuesday.
I was like, is
Wednesday,
there real estate? I couldn't remember if that was Tuesday or
yeah.
not. And then Wednesday, I didn't really see anything that I was going to pay attention to on Wednesday. Obviously Thursday is the day that's more important to me, because we have the release from the January data. So we have core CPI data, consumer price index year to year, the federal budget, which, by the way, it's going to be interesting to see what that report is. So, you know, it, I would say that the first 3 days of next week are going to be kind of in that similar lull phase where people aren't going to really necessarily be completely bullish or completely bearish in whatever fears or whatever plan that they have for Thursday's data. And it's always interesting that these reports are released an hour before the market open. So, it kind of sets the narrative going into next week, but also sets a narrative for Thursday. So, if you're prepared for them, then great. If you're not, and you don't even know what we're talking about, then you need to learn, because the economic calendar is so important, and there is a huge difference between microeconomics and macroeconomics. If you don't know the difference, you need to learn that too. So, as a whole, I would say, like I was just saying earlier, those are going to be some of the names that I'm looking for, in relation to what's going to be affected most, by those initial jobless claims, and what's going to be consistent of the core CPI data, from year to year and month to month. So if the data favors, um, not having to foresee those immediate rate hikes. And I mean, I don't really like talking about the Fed stuff, but it is what it is. It's just, it doesn't affect things as much as, people would like to say. But, I like to just react to what's happening while the market's open versus freaking out before the market's even open, because you can always react faster than you can, I guess, be tardy to the party. If you're waking up at 9:20, rolling out of bed, brush your teeth, shower, whatever you do, hopefully you do it, and then you just hop onto your computer and start trading, it's going to be more stressful than not, because you have to plan. The trading it requires passion, it requires diligence, it requires healthy habits. All these things roll up together to make a successful trader. So you can't just roll out of bed and start trading. So, and I know people do it, and I keep telling people that you cannot just take trading lightly. Otherwise you're going to give your money to people like us on the panel, and we're going to take it.
100%. Trading is a full-time job, and a lot of people like to think there's a lot of glitz and glamour or whatever on the back end. The truth of it, it's a lot of grinding, a lot of looking at a screen and picking your setups
It's
and
your
doing a
own
lot of stuff. It's
business.
not
That's how you got
fun.
to look at it.
It
It's your
is.
own business. You're in control of 100% of your shares. You're in control of the good decisions your company makes and the bad decisions your company makes. And if you were operating Amazon and you made a terrible investment and you lost 25% of your account, or 25% of your employees, or you lost 25% of your factories, do you honestly think that that's how you would risk your own business in the market? So when I see people YOLOing $2,500 on a $10,000 account, you wouldn't be doing that if it was your own business, if it was your education, or hopefully not. So, just manage risk better. That's all.
100%. Managing risk is super important. A lot of people like to talk about extending gains. Managing risk is equally as important, if not more important. The truth of it is, if you have your risk fully managed, you can really go out there and shoot 10, 20, 30% if you're playing in the right areas with the right amount of gains. But that is neither here nor there. No matter pretty much every single concept that you do and try in the stock market comes down to either maximizing gain or limiting risk. It really can most stuff can be just boiled down to that. But with that, we are right around 5:15. We've been going for about an hour and 15 minutes. We are going to head into wrap ups. I do just want to say before we do that, make sure you're checking out all the speakers we have up here. Big shout out to Stock Talk Weekly and Exclusive for coming in here and giving us a wealth of information. I know Brad had to drop off as well. And shout out to Wolf, my co-host on all these spaces. He grinds. There's at least 20 of these a week at this point, which is wild. He's about to be a Guinness World Record holder. So make sure you're checking him out if you're enjoying spaces. Make sure you're checking out all the speakers that we have up here. I'm going to kick us into wrap-ups and start it over with you, Stock Talk. I would love to hear we kind of did talk about what we're looking for next week, but if there's anything else you wanted to add there, and then anything we got going on for the weekend or stuff like that. Stock Talk there. Quick pivot. All right, perfect. I'm going to throw it over to Exclusive first, is what I meant to say.
Yeah, I'm not gonna lie, man. I just completely spaced out. What was the question? Or was it
Wrap-ups
just
in
wrap? Oh,
general,
just wrap up.
wrap-ups,
Okay.
anything you got. I would love to hear about your Discord. I would love to hear about anything we got going on in the weekend. Maybe any plans for
You know
Monday.
what? I always forget to self promote. I don't do it enough, but it is what it is. Yeah. So I have a private Discord. Obviously we've got multiple tiers. $50 is our cheapest tier. So I always tell people that ask, what tier should I start with? If you don't know what tier you should start with, always start with the basic one. I talk to people directly on my Discord, which is one of the biggest advantages, even if you're in the small tier. Um, I'll probably even throw up a promo after this, like a flash sale for anyone that's interested. We'll probably do like a 10, 20% off type deal. But yeah, no, going into next week, I want to see continuation in some bigger companies, because I feel like it was really unusual to see the action that we did in names like Apple, um, Microsoft, Adobe. Even though Nvidia and AMD, even though they had volatile weeks, I feel like there's still room to the upside on all of them. And of course, it's going to depend on how the market reacts next week. And when I say react, I mean because people react to the economic calendar before they even happen. So we find ourselves in a position where if it goes to the upside, be ready to play long. If it goes to the downside, be ready to play short. So that's gonna be the thesis going into next week. Obviously, I like my normal stocks that I always talk about or that we always post on Twitter. Um, but I think I'm gonna focus a little bit more on cloud and software, financials, the real estate, and communications. So I'm going to be focusing more on those sectors next week. And I think maybe on the back burner, I'm going to be paying attention a little bit more to retail, because, you know, I noticed a couple names hit some pretty major moving averages and exponential moving averages and rejected. They didn't go back to the downside or anything like that, but they did test some major moving averages, and I want to look at some of those to clear on Monday and Tuesday and reclaim some of these major supports or previous major supports that are now resistance. So, in particular, if I had to give out individual tickers, I really like Lululemon, ticker LULU. That's a good name. They sell overpriced apparel for yoga or whatever it is. I know I buy my fiance stuff there all the time, so I'm gonna be watching them along with a lot of other retail names. So it's gonna be a long list. We'll probably post some up on Twitter this weekend. So just keep an eye out for those. But yeah, no, I mean anyone's open to asking questions. I just reopened my DMs because a lot of people were commenting that they can't reach me or they have questions about something else, even though it doesn't have to do with me. I still feel like I'm leaving people hanging. But the only reason why I turned off my DMs was because I was getting so much spam. It was like if somebody had a legitimate question, it would get buried under 200 DMs. So I reopened those. So if anyone has any questions about what we talked about, what I talked about, or what's on my feed, just shoot me a DM and I'll be more than happy to answer.
Awesome. Love
If you
that.
have a
Definitely.
specific stock to look at, I mean, I don't mind charting some while I'm here in front of my computer still.
Well, you want to hear one that's going wild right now?
Let's hear it.
Shout out to the rumor that I just put in the nest from the Wall Street Journal.
Don't say. Oh, I thought you were gonna say
Amazon is
Peloton.
reportedly interested in acquiring Peloton. It's not a firm thing or anything like that. What it's
Reported by
saying
Market
is
Rebels.
this one is reported by the Wall Street Journal. So
I
Stock
know,
Market
I
News
know.
actually double checks its sources. We make sure we get that out there. But they're saying that there's multiple potential suitors around it. But Amazon is reportedly one of them. And it does talk about in here that should there be a transaction, it could be. Actually, never mind. I'm not going to read that part out. But
Holy
yeah,
fuck!
so
It's up 40%.
40% in after hours. So I don't know
Yeah.
if we can really do anything on that chart. But
Yeah. So, okay. So Peloton is in a similar situation as some of these semi names that were in the same setup last week. So you see something that is extremely oversold. Everything as far as what's happening in their earnings, in the news, the sentiment, in every single facet of the market, Peloton has been getting beat up. Even myself personally, I bought a Peloton and I know that they use a firm and they triple charged my card. And I was just like, okay, I can understand why they're down. But I always make a joke whenever there's like an inside joke on my Discord. Whenever I shop somewhere, they're like, "Oh my God, go long." So using that, yeah, I guess that would be the ultimate reason to go long because I bought from them. But from a technical perspective, 35 is a reasonable moving average on the 50-day for the 23-hour to consider. But going into Monday, I really would be careful trading Peloton until it gets back above like 47.50 to $48. If we can get back into those levels, then I'll consider trading it, into a position where I might take it, for more than a week, maybe a week. But yeah, I like waiting for confirmation. But yeah, I agree. That's a big deal. That's a big deal.
it's crazy this is coming out after the close on Friday. But I see we got Stock Talk back up here as well. I know we were memeing our Stock Talk. We got you here?
Yeah, I disconnected. I don't know what was going on. I couldn't hear anybody, so I had to leave and come back.
No worries, dude. Well, we're kind of heading into wrap up slowly. As we're doing this, a funny story broke, kind of funny about the market's rebels, but Peloton is screaming higher right now, up about 40% on some takeout, on some buyout rumors. But yeah, in general, if you want to comment on that at all, you can. You don't have to. But in general, wrap ups, how you feeling about where we're at right now? I know we talked about that a little bit. Or anything you got coming for the weekend, and then I'll come back. I definitely do want to hear a little bit about your Discord as well.
Yeah, is there any numbers that came out specifically about the acquisition? Did they say what value?
So it's from the Wall Street Journal, so no, not a market's rebels here. It's saying that Peloton is drawing interest from potential suitors, including Amazon. So there's accordingly a couple there. And the only thing they said was, in quotes, would be significantly higher than Peloton's current market cap, which is how acquisitions normally go. But nothing set in stone or anything like that. But Wall Street Journal is a little more reputable than
No,
other
yeah, I
sources.
believe a Wall Street Journal rumor for sure. So yeah, I mean, if it is Amazon, look, I mean, you're going to see this kind of reaction. Usually, when you hear acquisition news, you see a reaction because, typically speaking, public companies get acquired at a premium, and so you may see Peloton get acquired at a premium, but I anticipate if Amazon did give them a call, they probably gave them a call when the stock was bottoming out and negotiated it around what the stock price was looking like, near the bottom. I would imagine, because Amazon wants every acquirer wants to get optimal value for the acquisition. So yeah, I mean, I think there's a chance that maybe this reaction is overdone. Maybe Amazon comes in and goes like, "Look, we're gonna." I don't know what their market cap was today. You can check that, Evan, but. Whatever. If Amazon comes in and acquires them at a $3, $4, $5 billion premium, should the stock be up 40%? Probably not, but we'll see. It's a nice move though for anybody who did get calls today. I noticed a lot of flow on Peloton today. I thought it was just kind of, part of the mania that we had today with so many names up double digits that aren't normally up. But yeah, it looks like maybe somebody knew in advance. But yeah, anyways, I mean, crazy reaction. We'll see. It could even go 50% after hours. We'll see him. It's already cooling off. It's now only 33 now, but we will see what the value comes out at in terms of if there were those discussions. But it says other suitors as well, so maybe it wasn't just Amazon. Maybe it was somebody less interesting. And I think also part of this reaction is probably fueled by the fact that Amazon ripped today. That might also be fueling it. So, anyways, but yeah, and just in a general wrap up of the week, I'm staying a day trader. I'm not normally a day trader. Typically in the past I've swing traded, but I understand this market is not friendly to overnight holds, especially on the option side, but even on the equity side. I mean, we've seen equities even trading like penny stocks for the most part. So just be careful, be mindful. And as I said earlier, I mean, I went on a huge spiel about it, so I won't go on again. But if you're a trader that's unaware of how Federal Reserve monetary policy affects the market, that's something you should absolutely know if you plan on trading for, in multiple different environments for multiple years. You have to know how the Federal Reserve impacts the stock market. So that's something I would definitely look into. With regard to my Discord, it's just a community that we've built. It's very based around education and trying to teach people how to fish on their own, really is the guide for it. But we also have daily trade alerts and options. We have equity swing trade alerts. We have small caps, large caps, ETFs. I mean, we try to cover everything, or at least that was my intention, so that there's a little bit of something for everyone. And then traders who might have a certain style of doing things or a certain asset class they're interested in too can maybe learn how to branch out. We also cover a lot of educational materials. We have mentorship, basically 24/7 Q&A. You can ask me a directly question at any time. You can ask some of the other professional traders I have in there a question at any time as well. So it's a resource for newer traders, basically, who need a little bit of an extra helping hand, or maybe even a lot of an extra helping hand, or even if you're a great trader, experienced trader that wants a place to brainstorm ideas or use it as a scanner or any of those sorts of things. That's all available there as well. And I've tried to price it as affordably as possible so that, everybody can still be accommodated for their time that they spend in there. But, it's only $20 a month. So comparatively, I think cheaper to a lot of other options that are out there, and something that I tried to make as affordable as possible so anybody who does need help can get it. But yeah, that's it. What it is in a nutshell. If you're interested, there's a link in my bio and you can read a little bit more about it. If you are interested, if you're not interested, no pressure. I continue to tweet for free every day as well. So that's an option is always available there.
Sorry, had to get back. Same problem I guess we all have. Definitely appreciate that stock talk. Make sure you're checking him out. Check out his Discord. Check out all the speakers we have up here. A paid product, we all know that it's not for everyone, but a free Twitter that is spitting out the knowledge of the level of these people up here is for everyone, and you should be following them. It's free. It's easy. Check out Exclusive. Check out Stock Talk. Go into their profiles. Give them a follow. Big shout out to Bullish Rippers, the Green Raccoon up here as well. Check them out. Check out what they're doing. And then a massive shout out to my fellow co-host, Wolf Financial, who's always been putting on amazing spaces, been going for at least 20 this week. If you enjoy spaces, you're still in here. You clearly do. Definitely a fantastic follow. All these people are fantastic follows. I know Exclusive is doing his live trading. I see him live all the time. I see Stock Talk doing the 8 p.m. spaces on Sunday, 8 p.m. Eastern spaces on Sunday. This guy is literally hopping around spaces, so many different all day, so much content out of his mouth. He's so knowledgeable, a must follow. And like I said, Wolf Financial is putting on at least 20 spaces a week. So these are all really top class accounts, must follows on FinTwit. But enough rambling there. I want to throw it over to my co-host, Wolf Financial, see if he has any wrap-ups or any thoughts.
Hey, I actually had a question for Wolf. If you have so many spaces, how can I keep track?
Let's go. I love it.
Everybody's hopping in. It
Hey,
is a
really
great
quick though,
question.
before you answer, actually, I wanted to touch on that Peloton news. What if Apple was one of the companies considering them, because Peloton does not have the capability of streaming any TV live or pre-recorded. They only have their boot camp stuff. And the only reason I know now is because I was physically there buying one, and I was like, why don't you guys have like Netflix or something? What if I want to, the bike's not for me, but what if I wanted to binge watch something or she wanted to binge watch something? So that's something to consider.
Can I tell you my only thought on it? I think Stock Talk hit this earlier. They said Amazon and other suitors. To me, that means we don't know if Amazon's actually the leader in this, but they're the biggest name. I feel like if it would have been Apple, Wall Street Journal, from the clicks perspective, would have not hesitated at all to say Apple in
Yeah.
there.
I mean, maybe I'm buying Peloton. Who knows?
Yeah. Hey, listen, Exclusive. We keep going down enough, and that trading group, the expert trader that you are, you got to be close. Well, 8 billion is still a lot. Billion,
Yeah, that's
you
a
don't
lot.
got to start. Visualizing a billion compared to a million is absolutely wild. Conversation for a different day, maybe even a conversation today as we're getting deeper into the Friday night, Friday afternoon spaces. But Wolf, I will come to you.
Yeah, well, you're correct on the hours. I just checked on my phone, and currently, since Sunday, I have clocked 39 hours and 23 minutes on Twitter. That's just on my phone. I usually have about 2 or 3 or 4 tabs up as well on Twitter on my computer. So yeah, we're definitely churning out a lot of spaces, a lot of content. Certainly can be difficult for people to keep up with all these spaces. You probably heard it in a number of spaces this week, so I'll just make it quick. We do have a free public Google Calendar. This allows me to add at the beginning of the week, and now I basically have actually all of them already done for next week, so we're getting better at it ahead of time. I can put all of the topics, times, and speakers onto a calendar, and then you can overlap that calendar onto your personal one, and you can toggle it on and off. So what I would recommend is, if you want to get on this, go ahead and shoot me your Gmail right now, or shoot it over to Stock Market News. It does work with other emails, but works best with Gmail. You'll then get an email to your personal email, and we'll say, would you like to add this calendar? You'll add it. And then I would say just look through and be like, hey, this topic, this topic, this topic, I really like those. I like those speakers. I'm going to go to those and just kind of note them down on your personal calendar, and then you can just toggle off the spaces calendar. But this will allow you on a week-to-week basis, see when all of our spaces are, see if any changes are made, get notifications, see recordings because we put those in there. So stop having to, endlessly scroll through the timeline to say, hey, when's the space going to be, or DM people. Just make life easy. Shoot us over the email. We'll get you on that calendar ASAP. And again, we're going to continue churning them out. I already have 17 spaces, perhaps more than that, scheduled for next week. So it's going to be the same thing that you saw here. We'll just continue churning out. And again, we heavily vet the speakers that we bring on these. We try for experts within industry. So that is our ultimate goal, is just free education to, at this point, hundreds of thousands of people this year, passing down no cost to the end consumer, and just allowing for a vibrant space where people can ideate, educate, and just learn together.
Love it. Love it. Definitely one of the best things that we have created. We do these so many spaces all day, every day. We're literally live from Monday morning at 9 a.m. to it's Friday at 5:30 right now. We are literally covering it all, and that spaces calendar is the best way to be on it. You also got to be following all the speakers up here. Will only make your timelines better, as I have been saying. But I will cut it off here and let everyone get out and enjoy their weekends or enjoy whatever they're going to do. I want to give a big shout out to all the listeners who came in here and got some value out of it. Really, we see so many messages and so many DMs of people saying that they love the spaces or they're getting some information or some knowledge out of it, which I know you all are. But that's really what makes it worth it, having people to come in here, to spit this knowledge to kind of take it in and then to make changes and positive changes and really make an impact. So it's really cool, the opportunity that we have to come in front of you and really share some information. Myself and Wolf are really taken the role of using our networks and using everyone that we have our hands on the amazing levels of traders and investors, such as Stock Talk Weekly and Exclusive, to really bring them on and pelt them with the right questions so we can give as much value to all of you. So as a part of it, they're coming on here for free, nothing pre-planned, nothing like that. All we ask is that you go in and give them a follow and make sure you're checking out all the people nice enough to come in here and present all of you with knowledge. With that, enough rambling. I'm excited to see all of you back. The next time we will be live as a crew, or I think all of us will be on there, will be at Sunday at 8 p.m. Eastern on Stock Talk Weekly's Trade of the Week. Wait, before we end it here, Gav, I'm just going to check exactly where Penn closed because for anyone who missed last week's Trade of the Week, we were on opposite sides of bets. You were long and I was short. And it looks like I'm seeing we closed the week up. So, hey, we're still probably both dead last.
Yeah,
but
you didn't win, so
1-0
that's
for
all I
me.
needed.
I'll take the one. I'll take the dub. Right, we're higher?
That ain't no dub. 2%, you ain't winning.
Oh, that's it. Listen, well, when you were short and I'm long, 2% is a big win. So 1-0 stock market news over Wolf Financial. Who knows if Wolf goes before me again on Trade of the Week, it might have to become a 2-0, maybe match him there. And but that I will say for a third time, that's enough rambling for me and actually close out the space of this one. So everyone have a great weekend. Thank you for coming on. Wolf, I saw you unmuted.
If I go short AMC, will you go long AMC?
No, you would beat me there.
There we go.
All right, everyone. Have a good one. Can't wait to see you guys on 8 p.m. on Sunday, and then right back again for the next week at 9:20 a.m. Eastern on Monday for Good Morning FinTwit. Everyone have a good one, and thanks for tuning in.